Hey, my name is Tucker Kraus, welcome back to my channel, and, well, we got some inflation numbers this week. Let's look right at them. So, the Producer Price Index we got first, that printed 8.5% year over year. Expected was 8.4% year over year, but that is down from August 8.7%. So a little higher than expectations, though cooled down slightly from last month. And month over month, it was up 0.4% after decreasing for 2 months. This chart here kind of tells us the whole story. Now, we of course want to look a little bit deeper than just the numbers. Just the numbers alone don't tell you a lot other than inflation is obviously high. And so we can see that much of the inflation is being driven by food prices, at least when it comes to the PPI. Food cost inflation is still up 11.9% year over year, which is of course higher than the standard index. But now let's take a look at CPI. So US September core CPI was month over month 0.6% increase. Estimate was 0.5% and previous was 0.6%. Core CPI year over year was 6.6%. Estimate was 6.5% and previous was 6.3%. Then September CPI was 0.4% month over month. Estimate was 0.2%. Previous was 0.1%. And then year-over-year CPI was 8.2%, estimate was 8.1%, and previous was 8.3%. And so, just judging the numbers from the PPI and the CPI, we can see that inflation obviously is still here. Obviously, it's still increasing, coming up above expectations. And, it's kind of mixed whether it's higher or lower than last month. And this chart here shows us, right, we've ticked down ever so slightly from the highs, though obviously we're still ridiculously high, not to mention CPI is a fake number, and real inflation is much higher. So here's the main interesting point that I want to cover here with the CPI. It's that the sticky inflation is the inflation that's continuing to increase, and that's of course not what you want at all. Services inflation, we can see on this chart right here, has continued to rise, whereas goods inflation has pulled back somewhat. And services inflation is usually very sticky inflation. This is inflation that doesn't, just come down on a dime. Often when a service inflates in price, it's, going to be a lot more difficult to bring it back down. Whereas you see oil was over $100 this summer, now it's under $100, right? Though it's started to ramp back up again. So now imagine, right, if we see oil go on a tear here soon. Of course, we had that big run up last week. It was kind of down a little bit this week, so we'll have to see where it continues to move. But, if things like oil start to rebound, combined with services continuing to increase, who knows where inflation's going to go from there. And then the owner's equivalent rent index, so essentially how they track the cost of housing, increased 0.8% over the month, which is the largest monthly increase since June 1990. And so following that, the odds of a 100 basis points rate hike increased substantially, and it pretty much guaranteed that we would see 75 basis points from the Fed come November. And so of course that once again is, putting a nail in the pivot narrative. Though, it could be possible that we do see a pivot here soon. We're seeing a lot of currencies and markets around the globe break. And who knows, you're starting to see kind of people are like, hey, Powell, we need to stop with these hikes. We're kind of hurting over here. So who knows when that's going to change. But things are definitely breaking. But inflation's still high. So it's likely the Fed is going to continue hiking till something breaks. Whatever that is. It's going to have to be something really, really large that's going to have to break for them to stop at this point, considering inflation is just still going. And following all of this, we had some really weird market action. We initially dumped on the CPI report before rallying back up like crazy, and then we dumped again on Friday. So definitely a turbulent market at the moment. We're just going to have to see, are we going to keep chopping sideways here until something breaks, or, we're going to go to a bear market rally? Who knows? Either way, this is not financial advice. Do your own research. Thanks for watching, and I will see you next time.